This episode is brought to you by Anoma, the universal intent machine introducing a new era of applications where you define the outcomes you want. To stay up to date with Anoma, you can follow them at x.com/Anoma or sign up for the newsletter at anoma.net. Special thanks to Anoma for sponsoring today's episode. Re.al is a permissionless L2 designed for tokenized real-world assets. They've just launched their rewards program, so get started at re.al/rewards and be sure to use the code in the show notes below. Special thanks to Re.al for sponsoring today's episode. This episode is brought to you by Avalanche. Avalanche is a leading network of blockchains giving some of the world's largest financial institutions new use cases and business models while leveraging completely customizable infrastructure. Check them out. It's core.app/discover. You can explore Avalanche's subnet ecosystem at core.app/discover. I was playing around earlier today. Really cool. Hey everyone, Jason here. Have you ever wanted to play casino games with your friends right from your couch? I'm excited to tell you about MyPrize, the first multiplayer online casino where you can play, chat, and win together. When you make your first deposit of $10 or more, you'll get $20 for free. Head on over to myprize.com/invite/empire to get started. I'm having a day over here. What's up, everyone? Welcome to Empire. We got the Roundup. Santi, why are you hurting? What's up?
I had a colossal fall on the bike.
Did you really?
Yeah.
What happened?
It'd been like a long time since I fell. I don't know. I was cycling with a buddy. He's training for his Ironman in Copenhagen next week, and hits me up. I'm like, all right, let's go for a ride and venture over to Italy. And man, just Italian roads are just third world country. And on the descent, I just had a feeling like literally 2 minutes before I fell. I was like, I think I'm gonna fall. And
you look fine though. You didn't scrape it up too much. Oh yeah, you did.
No,
all right.
Yeah, this did. And then there's other parts of my body that are not suited for the podcast.
People are listening on a Friday or Saturday. We can show it off.
I don't know, man. I don't know what's worse, the bear market or my body or my bodily injuries. I don't know what bear market. We're
I'm sure if you just said what's worse, my bodily injuries or my butt, but we'll take it. Dude, this you know why you fell, right?
Karma. I don't know.
So when I was in college, I did this I'll share it for another day. Actually, I basically did this multi-level marketing thing that was ridiculous, and ended up being probably I don't know, should or should not have done that, but I was really good at it and had thousands of people in my what is called a downline, and I got really into personal development stuff Bob Proctor, Tony Robbins, Napoleon, whatever his name, and one of the things was thoughts become things. So the reason you fell is you were thinking you were going to fall.
I visualized it. Wait, I'm thinking that my portfolio is going to do 100x. Why haven't I done 100x?
You're not thinking hard enough. You're not doing enough thinking.
Okay.
And there were these guys in this company that I was doing it with, and they were like, you just got to visualize. You just got to manifest it. And I was like, fucker, I'm manifested. And I was 18.
Well, what are we manifesting this in this roundup? I mean, I guess I had a really good discussion yesterday with Kane. They're launching their own pod with Infinex, and we were just talking about the markets, and it was just him and I just share. We go way back, and so there's just so many stories that we could share. We could probably go on for hours. But I'd like to start this pod. There is this great tweet by Ceteris. I think he goes by Ceteris. Basically shows a year-to-date performance of all the different coins, bucketed by L1s, AI, and a bunch of deepen and other categories. And basically, the only categories you've made money this year is Solana and meme coins, and a select handful of meme coins. And so we were just talking about, that was the opening, right? And it got me thinking, because I re-listened to the pod with David Kalk and what's his name?
Jeff Hart.
Sorry, Jeff from Bitwise. A lot of people really liked it and reached out and said, oh, it was funny. We recorded that before the flash crash, I guess. But anyways, it's Kane and I both sort of came to the conclusion that it's a very you would think that it gets easier to like navigate crypto cycles, but this cycle has just been, whether you want to call it a cycle or not, Kobe thinks that we haven't even started the cycle, but for all intents and purposes, this year, it has been very exactly this chart right here, ladies and gentlemen. So color coded, sounds like this guy worked at an investment bank. So the only categories that have made money are Bitcoin up, 32%, Solana outperforming Bitcoin at 43%, and then Pepe with Bonk, Flocky, and Sheeb. Everything else is, and a few kind of like Pendle and here or there, like, but like you look at this and it was like other cycles kind of didn't look like this. So it almost mimics the equity markets, right? Where you've had like a very concentrated return of like, the Magnificent Seven. And yeah, so I think this is really good context for the pod. I don't know if we should go there, but there's a whole host of things that we can unpack here.
I mean, let's do it. Go in. So keep talking.
See, I'm doing all the heavy lifting and manifesting.
Dude, I'm eating lunch right now. I'm hungry.
Okay, all right, let's do it.
I'm eating my meatballs.
Wait, what happened? What happened to the chart?
I want to show you I want to show you my meatballs, but
wait, no. We've talked bodily. Anyways, moving on. So when we think about this, so like most fonts can't touch meme coins. Fine. All right, go listen to the pod with Joe McCann in November of last year. Probably one of the few fonts that actually, was comfortable openly talking about owning meme coins. Most can't or won't, at risk of being ridiculed by their LPs. But like this is a very much a have and have nots market. And I don't think, I mean, maybe my memory is betraying me here, but prior cycles didn't look like this. You obviously had like DeFi summer, like concentrated returns and outliers, but like this is just like extremes, right? You have severe underperformance and severe outperformance, and there's like no man's land. Maybe DeFi is kind of there, but it's still lagging, but it's still down. I guess like coming into the cycle, you would have said, I'm gonna do the L1 L2 convergence. If something like Ethereum does well, the L2 should do well, right? Well, not really. You have ARB, OP, ARB and OP down relatively the same, 66%, 67%. Well, the modular thesis. Well, no, you got crushed, right? TIA down 58%. Maybe you would have made some money on airdrops. Dimension down 75%. So that narrative kind of quickly went away. Some of the other L2s, Mutable, which is now fully vested mostly, is down 46%. Monta is down 68%. Blast is not on this list, but it's also down. There's a whole host of criticisms around, like there's not much going on and the points and the meta and all this stuff. But so the L1, L2, as a whole, the Ethereum ecosystem is just vastly underperformed. I think ETH here is 10%. I mean, shit, man, you better off like doing senior secured credit and clipping 15%. So that's underperformed quite dramatically. Like just the Ethereum ecosystem as a whole, the Cosmos ecosystem as a whole. Ethereum DeFi, there are some kind of brighter spots. So like, Ethereum, ETH DeFi for context has been underperformed. And this is something Kane and I talked about extensively. Like, ETH DeFi has been, in a bear market since even November, since before rate hikes. But something like Maker, we've talked about here is up 15%. Aave's rallied recently. I think there's this meta evolving around what happens if rates, with rate cuts now really on the horizon, does that make ETH DeFi or just DeFi as a whole more attractive? Possibly, likely. This is a great comparison. So like Sol DeFi relative to ETH DeFi has outperformed vastly. And interestingly, a lot of these like trade at much higher FTVs, right? Like Jito trades at I forget, like 7 billion FTV, maybe more now that they announced. But relative to like, I know they're not perfect
I don't think
comparisons.
Judo's 7 billion. I think
Sorry,
about
no, not
two or
Jito.
three.
Jupiter is. Yeah, Jito is
Like
2.7 billion FTV, and
Jupe is probably over 7 at this point, 8 or 9.
correct, yeah. So Jito is 2.7 billion. Market cap is only 340. So a lot of it's still locked. But compare that to Lido, which took a heavy beating, by the way, on Monday. Lido is at 1.1 billion. Most of it is already in circulation. So like market cap and fully diluted are very, very similar. So like that's just you look at this, and of course, I mean, no surprise, right? There's a very clear, strong narrative of the cycle, which is Solana and the Solana ecosystem vastly re-rating relative to Ethereum and other ecosystems, but primarily Ethereum, which is returns off the bottom. And so what you want to look at also is like what actually rebounds fastest, like what catches a stronger bid. And again, Sol, like look at the top left, 31%. It's actually higher now. Like Sol is now 155, 157. And some of the meme coins like WIF here is 142. Now it's like 171. I mean, it's just incredible strength, right? And that is a very clear signal of what the market is bidding. Anyways, there's the other observation I want to make, and then I'll pause, and then I'll stop rambling. Is a lot of the projects that there's just no bid, and we talked about this in the episode with David. It's like projects that are unlocking have vastly underperformed. Like there's zero bids. There's zero interest in those. I don't want to say zero, right? But they're vastly underperforming, right? There's just no liquidity in the system. It's like hot balls of money moving around, mostly between the Solana ecosystem, mostly within memes. Any new money's coming in mostly has been retail. And that's going directly into memes. And the meta around buying low float, high FTV coins is just really there and strong and top of mind. So, yeah.
So David Canellis at Blockworks ran this analysis in the, actually shout out the Empire newsletter.
Mm-hmm.
So you can see for anyone watching on YouTube. So basically what he did is he took the S&P. So the green line here is the S&P. Then he said a BTC Maxi portfolio. He wanted to basically look at a BTC Maxi portfolio, a buy the dip portfolio, which says you put in, you invest more anytime there's a 10% drop. Then an 80-20 portfolio, BTC 80, ETH at 20, and then a 60-20-20. So BTC 60, then Sol 20, Sol 8, and ETH 20. And what you can see here is like, okay, so during this time period, this is from January 1st, 2023. Okay, so 80-20 portfolio up at 200%. BTC Maxi up like 220, 230. Buy the dip is up 400%. And then this 60-20-20 portfolio outperformed, I mean, it's up 450-ish percent. So like that's, I think, why you see what it feels like is the Solana ecosystem dancing on the timeline and everyone else not.
To be fair, the starting date heavily influences the
yeah, it does. And he acknowledges
like
that
you're basically saying like, and I'm telling you, the 1st of January 2023 was the absolute bottom for Solana. It was when it hit $9, $8, $8.40. If you go back, if you like started in, I don't know, mid-Jan, Sol's already at 26.
Right.
That would likely change the gray, the brown line for everyone watching online to below the dip.
Yeah. I mean, the thing, yeah.
But I don't think it like, I don't want to like look great analysis. The conclusions I think is still pretty much the same. Is if you didn't have Solana in your portfolio, yeah,
all right,
you get paid to get a couple of things right. I understand if you don't want to pump meme coins, but like Solana, really?
So the question becomes then, Santi. So, and by the way, actually, before moving on from that, so Cedrus's thing, I guess he did, this first one is about returns off the bottom, but it's important to call out, like, there were things, people made a lot of money in 23, right? So if you look at like Celestia is a good example. You were saying like this modular narrative, like Celestia ripped from 2 to 20. That's a nice 10x in like
someone made money
3 months there, but now it's basically returned back to its initial price.
Yeah.
So, or maybe it's up 100%.
You know, if Ceteris is listening or one of your analysts wants to run this analysis, give me or show me a little dot of when the unlocks start.
That'd be a good thing to add to actually Blockworks Research's platform. That's cool.
Yeah, like literally just start in telegraph, and then obviously going forward, right?
Yeah.
I was having this discussion with probably the analyst I'm going to hire, around looking at just like how market cap, instead of we tend to look at charts mostly on price, look at it on a market cap basis. For instance, it was relevant for ARB. Like ARB, there's a lot of noise in this analysis, but like ARB as an example, like it was trading at $2 before the big unlock. You go to the ARB chart. Yeah, so let's look at that. Okay, let's run this. So you go back to where not April, around where DAS was. April.
Oh, April 24th. Yeah.
Right around $2. I remember this. I'm an investor in ARB. $2. You start, then unlocks happen there. The big unlock happens there. I think it was like a bigger amount than the linear. It's like it was 10 or 20%. Goes down to $1.60-ish level, right? See that green line after that big dip down? That's support 160. Sorry, 1.6. Around April. Go to April. There. That green line right there. You see that $2 and then it dips to 160. Then and there. All right. That's the first unlock right there. And then
this huge red, you're saying this huge red candle.
Go even before that. March. Yeah. Because DAS was March, right?
Yeah, March. Okay. Yeah. So this big one from 2.2 down to like 1.6.
Exactly. And then you have some bid, some support there, like 1.6. And then boom again. And then there's some market stuff. Like there's a big dip. I think like everything kind of course, everything you want to look at this. So like the market trend's still obviously down for other stuff. So like what's signal, what's specific to Arbitrum, what's like just market. But yeah, you know, I think it's, and I tend to single out R because it's like high quality in my, look, none of this financial advice, but like incredible. Like I think is the best L2, the tech, the team, the ecosystem, like it's a very buttoned up organization. Like it's like blue chip. It's called that. So, and again, my theory is, and I'd love someone to validate or invalidate this hypothesis, is if you're an early investor, you're in the money. And so you didn't get into Sol, or maybe you had a very small, you didn't size it correctly. The rest of your portfolio is flat or up 10%. You did make some money 2023, but not enough to get above the high watermark. Right? This idea of a high watermark is at the peak of 2021, you collect carry. If you're not a venture fund, you're a hedge fund. You collect carry. You take a snapshot of the portfolio of an investment and say, boom, like say it's you're up 5x. You collect carry on that. There's a snapshot of the value. So the value is now 500, say, of the particular capital account. Then the market goes down 80%. So that is now, you know, worth 100 again, right? So it goes down to 100 for that set of investors that were in the prior cycle. For you to start collecting carry off of that base, you have to get above the watermark. The watermark is 5, right? So yeah, you did well in 2023. The market rebounded 2023, you know, but if you didn't get very specific things right, like not just sitting on ETH, maybe Bitcoin, but not Solana, you're likely not close or very close to that 5. number, the high watermark. Meaning, you invested in Arbitrum last cycle or other projects, and when you have an unlock like that, what are you going to do? You're obviously trigger happy because you're almost indiscriminately going to sell to get above that watermark, right? Because ETH isn't carrying the weight. You may have or may not size Solana well, or Bitcoin, and you're sitting on a lot of these things that, like, if you're clocking, you don't care if you're clocking a 10x at $2 or a 8x or a 6x or a 5x or a 3x down at 50 cents. What you care is to get above the 5 to get paid this year, because you haven't been eating the last 2 years. And that dynamic, I think, is carrying, that's as a whole, I think, what is challenging. And I was talking about this last year. I was talking about this a year before. It's like a lot of these unlocks, if you don't have new liquidity coming in, you know, the early investors, especially coming off of the last cycle that need to really get above the watermark, you know, are going to be like forced sellers in many ways. And that is challenging in the context where you haven't really had new flows coming in, like stablecoin. We talked about in the prior pod, like the one of the most important metrics to track is stablecoin flows. And that's not coming up. Like, if you look at the aggregate inflation of like tokens coming live with the unlocks, I think there's a great website like Unlocks or something like that that tracks all the unlocks.
Token unlocks?
Yeah, I think they track the aggregate number of unlocks happening, like call it per month, per week.
Yeah.
And I think let's go to that. So these are presumably the major ones, or captures most of them, right? So in the next 7 days, you have 200 million of unlocks. Linear unlocks per day, 50 million. So now I think what you overlay, again, one of your analysts should run this, is that and new flows coming in. So look at new stablecoin supply growth, like the rate of change in supply.
I see this metric like, you're getting at. Stablecoin inflows, is it greater than the opening?
If it's greater, bid all this stuff. If it's not, don't. Like, algo, do this. You know what I mean? You'll know when to bid a lot of this stuff when the stablecoin rate of change vastly exceeds the unlock that needs to be absorbed by the market.
Yeah.
That's it. I mean, that there's no, and that's where I think that's what Kobe's getting at. I think that's what Kane's getting at. I think that's my view as well. It's like the cycle kind of really hasn't started. We call it a cycle because obviously, like Solana said, a vast, like, and Bitcoin, there's been discrete catalysts that are like suggested it's a cycle, right?
Right.
But as a whole, it's not.
So maybe let me show you this. So if we let's pull up the Bitcoin chart. So I think the interesting thing to look at on Bitcoin is actually to go back to 2019, right? So there's two arguments for this cycle. One is, hey, look, we're actually probably like late 2019, early 2020. Maybe this moment the other day over the weekend was like a March 2020 type of moment. And like the cycle is just starting. The other argument is we're maybe like halfway through the cycle. This was like, I don't know, consolidation before the second stage of the cycle begins. So if you look at 2019 here, right, Bitcoin fell down to like 3,000, came up to 12,000, and then went right back down to 4,000 over the next couple months. Obviously, with the 4,000 being March, what was that, 12th, I think it was, of 2020. And if you pull up, did you read Kobe's tweet? This one?
Yeah, just leave it there for folks to read.
Yeah, so I can read it for anyone who's not watching on YouTube, but someone tweets out, he said, this cycle is just starting. Kobe goes, unironically, cycle has not even started yet. Someone goes, people think you are serious, lol. He goes, I am serious. Increasingly, I like the argument that this is not even a cycle really, but it's more like 2019 with leverage and ETFs. Was 2019 a new cycle or was it part of the bear market? Floated this idea to a few people in March, but everyone told me I was an idiot, which I am. but still, it was quite rude to say that to my face. Of course, if we're in 2019 looking 2024, it doesn't mean that 2020 plays out the same way, because structurally so much is different now with the ETFs and high FDVs. Probably too difficult to pattern match too much stuff about the future. So, I mean, I have thoughts on this, but I'm curious to maybe you want to, what do you think about it?
Yeah, I don't know. I want to believe it. I think
this is the question. What Kobe is saying right now is people get so fixated on the cycle. I think the reason why it's like almost tough to answer this question is because what constitutes a cycle? And like, was 2023 a bull or not? Well, Bitcoin went from like 16,000 to 45,000, right? It was up 3x.
Yeah, exactly.
Bitcoin in 2019 was up 4x before it tanked again. So like, is that a mini bull? Was that a 4x inside of a bear? And that's, I think, why that question can be hard.
These things are easier to package up into nice narratives after the fact. But let's just imagine if you're there in 2019 and you see Bitcoin do a 4x and then it goes down to 4,000. And then it rips again to what? Pull up that chart again. So like from that 2019 moment that people keep referencing, that's 2019. You go from 3 to 12, right? Give or take. So that's 4x.
Mm-hmm.
And then you go down to what you're saying. Sure. Let me ask you a question. Do you use log? Are you seeing in a log scale?
I don't know what I'm looking at here. I think I just moved it to the
crypto charts, by the way, should always be looked at on a logarithmic scale to not scare the shit out of me.
I was like, what week am I on?
Yeah, there we go. So it goes from 3 to 12.
Yeah, there it is.
And then down to 4.
Yeah.
And then in a matter of kind of 2020, in a matter of a year and change, you go boom to 60,000. I remember that. That was just bananas. I mean, that, especially that second half, like November, was it?
Yeah.
Q3, Q4. I mean, my God, it just went from 5 to, it did a 10x.
We published a podcast on Empire with Dan Held saying the super cycle is here. Bitcoin could go to 400,000 to give you a sense of where people's minds were at.
Okay. Let's throw away the years and thinking. Let's just think about flows, right? This is a lot of the discussion that I had with Kane, and I've had it with David and Pranav, which, by the way, we should have on. We should have David and Pranav. Is DeFi summer, or even in this moment, right? The market gives you plenty of time to scale into a trade with momentum. And you had it in DeFi summer. You didn't have to be early as we were in ParaFi. Like, you didn't have to invest in DeFi before DeFi was a thing and buy Lend and Maker and Synthetics at the absolute bottom to have made substantial outperformance and a just absolute return. You could have waited for Compound to launch liquidity mining. You could have waited even months after Compound launched liquidity mining, a month or two. You had Yearn, you had a bunch of things. You had all these farms, Uniswap, like so many things, right? And it was like a window of 3 months or a month, depends, right? But it's multiple weeks where the market is telling you like there's a shift in the narrative, there's a shift in the paradigm, and it's very reflexive. Like you're seeing Bitcoin here from 5 to 60. Ethereum did something similar. Solana has done that to a certain extent, right? I mean, it went from 8 to like 185 now, right? So I think we should probably stop thinking about, I don't want to go as far as saying, I guess, like, we should stop thinking about crypto as a whole, like just one bucket. The more it grows, the more it warrants just bifurcation. But I don't want to be, I think that's a bit naive. I think ultimately a lot of it does depend on what Bitcoin does, and then what the rest of the, space does. But increasingly so, each cycle, more and more, you have these pockets of just outperformance, like it has been with Solana and, memes this cycle. But I guess the more important thing is, so like over the weekend where, Berkshire announced, like it was Saturday where Berkshire announced like that they had sold a lot of their Apple. I woke up and I was like, oh, I know how this is going to look. Immediately, obviously, the crypto markets respond. I get on the phone with a bunch of folks, including Dave, including Pranav, and a bunch of others. And I was like, all right, like, let's, what do you guys think? And stuff like that. And my conclusion was I'd rather hold a little bit more cash. Because I want to be in a position of mental clarity, strength, and liquidity to be able to bid that post, right? To be able to bid that Q3, Q4 of 2021, right? And I may psychologically, let's run what's going through your head. So you were 2019, you're in crypto, you're looking at Bitcoin, and all of a sudden it goes from 4 to 12 in your face. You may have bought it at 12 because you're like, shit, it's going to 400. Like, I got to get on a bus. You buy at 12, it goes to 4. You may have sold at some point, or you're scared shit and you're like, oh. And then you're too scarred mentally. You may or may not have just allocated all of your bag, and you're just fully allocated at that point. And that's okay. Maybe you sold, maybe you didn't. Likely you sold at some point, right? And then it does that in your face. Then it rips from 4 to 60, and you miss that because you're too clouded, you're too exposed, right? My argument around that is that most people didn't have enough cash as a percentage of their portfolio in that period. And I think there's a couple of ways to go about it, right? If you're fully just, I'm talking about like funds, right? But even like retail investors, maybe more so. I've come to the conclusion that the way you want to play these cycles is like, I feel comfortable, and I'll say it again and again, I feel comfortable not timing the bottom. I feel comfortable capturing at best 50, 60% of the return of the cycle. And that underperformance, so to speak, that not capturing the absolute return, that's 4 to 50 kind of thing, is predicated on a couple of things. One, I'm never going to time the market. Two, trying to time the market is a fool's errand. It's going to distract me from other things. 3, it's going to put me in an uncomfortable position because if I'm all fully invested on not having any cash, I can't buy the dips. So you go back to the analysis that your analyst did. It pays to buy the dips. If you don't have any cash, good luck. Great analysis, no cash. Most people never have cash to buy the dips. And so I think like I've just come to that conclusion where it's very difficult to hold cash, especially when stuff is ripping. But I think you take comfort in the fact that you're going to have plenty of time, a couple of weeks, to really scale into the trade. The question is, we had a huge shakeout on Monday, but I'm still, okay, you're supposed to like, bid at that point. But I don't know, like I'm not seeing it with absolute clarity. I basically think, to Kobe's point, we're like in that choppy period of 2019, And it's fine. You could just like cost average your way in, no problem. Maybe that's what you're supposed to do.
Of 2019, you mean?
In and around that period. Like it was, and by the way, those are big movements, right? It's like 4 to 10, like 4 to 7, 4 to 8, like those are big movements. Right?
I remember the 2019 movement up. This was the Binance IEO bull run. Remember that? All those Binance IEOs.
Yeah.
I remember thinking this can't actually be happening. This isn't real, because 2018 and 2019 felt so long. Like that was my mentality then. Okay, so I have a question for you. Why you're saying that you're timing the market by trading in and out of this stuff, but then you're also telling me you're not trying to time the market?
No. I'm not necessarily moving in and out of this stuff. I am just increasing my cash allocation.
But where do you get the new cash from?
Oh, from outside.
Oh, well, sir, we don't all have
So,
that.
well,
Outside
how do
places
no, no,
to
no,
make
no, no. Like
happen.
I'm selling. No, no. What I'm telling you is I sold some over the weekend and
Mm.
Monday. Some.
But isn't
Not.
that timing the market?
I don't know. Like, I mean, I'm not trying to. You could argue it's timing the market. I'm doing it more so to have, and I credit Pranav to helping me come to this realization. I'm doing it to psychologically be in a better spot and feel good and strong about bidding. In that low moment. Now, I don't know. Like, I don't know if we go down more from here. It's always certainly possible. So if you factor that in, I just said differently. I think if when the cash balance goes, the percentage of cash in the portfolio goes low and it goes to a threshold where it's uncomfortably low, I am more likely to do dumb shit. I'm more likely to be shaken out. I'm more likely to think about it annoyingly, and it's distracting. And as soon as it's above a certain threshold, I feel good. And I'm not talking about just X outside of crypto, the portfolio that's outside of crypto. I'm just within crypto. I just think that within crypto, like imagine yourself as a fund manager that you're kind of paid. That's what I'm trying to convey here. It's like, because a retail investor is different, right? Or my position is different because I don't have like a fund. It's just my capital. But if you're a fund and you kind of are investing in these markets, like I think very few funds like have some cash. They're all kind of always fully allocated. But I don't know, go listen to the episode on David. And I think it just, I don't know. I feel like you should to some extent.
Have some cash, you're saying?
Yeah, hold some
Yeah.
cash. And it's like, I think some of the best investors like always have like pretty high cash balance.
Hey everyone, Jason here. I wanted to talk about something that's been on my mind a lot recently, and that is, where are all of crypto's killer apps? We often ask this question on the show, so I'm excited to tell you about Empire's latest partner, Anoma, the universal intent machine. Intents are a new way to build dApps, enabling users to say what they want without needing to specify how it's done. Let's say you have an NFT on one chain, but you want to swap it for a token on another chain. To make things even worse, you also don't know which bridge to trust or how to navigate different dexes on each chain. Disaster, right? But here's the good news. Thanks to Intents, you can just tell the app what you want to do, and Anoma's solver network takes care of all the complexity in the background. We're excited to see what cool dApps Anoma's architecture will unlock. To stay up to date with Anoma, you can follow them at x.com/Anoma or sign up for the newsletter at anoma.net. Special thanks to Anoma for sponsoring today's episode. Hey everyone, I wanted to take a second to talk about Re.al, a permissionless L2 for tokenized real-world assets on Arbitrum Orbit. What's really cool about Re.al is that it uses the off-chain yields from RWAs as a sustainable solution for native liquidity incentives. Re.al is also the first L2 where 100% of profits from transaction fees and fees from protocols accrue back to the L2's governance token, RWA. Re.al has just launched their rewards program where 10% of the RWA supply is being given away to early users of the chain. Users can provide concentrated liquidity, trade, borrow, and leverage tokenized real-world assets, including T-bills, real estate, and tokenized basis trades. Just as a quick disclaimer, this is not investment advice or product solicitation and not aimed at US persons. Find out more at re.al/rewards. Special thanks to Re.al for sponsoring today's episode. Hey everyone, wanted to take a second to talk about MyPrize, the first multiplayer casino where you can watch, chat, and play together with your friends and favorite creators. Getting started is super easy. Use a credit card, PayPal, or even crypto to play over 500 games, from classic slots to live table games. Join the MyPrize community now and use referral code EMPIRE to get $20 for free when you make your first deposit or purchase of $10 or more. Head on over to myprize.com/invite/empire. Link will be in the description of today's episode. This episode is brought to you by Avalanche. Avalanche is a leading network of blockchains, giving some of the world's largest financial institutions the design space to explore new use cases and business models while leveraging completely customizable infrastructure. Everything that Avalanche has been building the last few years has culminated in this moment where today you have institutions and developers able to essentially have limitless possibilities with the chain. They've enabled developers to build cross-chain swaps or create gaming environments where one subnet can unlock features in another, or can use USDC as a native gas token. Onyx, for example, by JP Morgan, or Citi, or DTCC's digital assets, or the Australia New Zealand banking group, they're all building on Avalanche evergreen subnets. Really cool stuff. Big thanks to Avalanche for sponsoring this episode of Empire. Go explore Avalanche subnet ecosystem at core.app/discover. That's core, core.app/discover. Thanks again, Avalanche. If you had $100 that you were wanting to put into crypto at some point in the next couple of years, how much of those $100 are sitting in cash and how much are in crypto?
Well, like within the crypto portfolio, because I invest in other stuff, right? Like the holding company, if you like, you know what I mean? Like it's wait.
Yeah.
Oh, hey. Well, Pranav, I'm talking about you. I'm trying to replicate. I'm trying to recreate the conversation that we had over the weekend, and I'm basically going through the exercise of if holding a little bit more, like no one holds cash, and I'm positioning myself in a mindset of a fund manager, not me or a retail investor. It's like it pays to have cash, not necessarily because you're trying to time the market, because psychologically, you know, we're going back to like the market gives you plenty of time to scale into a trade once the momentum shifts. Even if you're not timing the bottom, if you get comfortable not timing the bottom and capturing maybe 50% of the move up, it feels good to have cash because you're going to be just psychologically, for me at least, have more clarity. And this is kind of the conversation that we had over the weekend, right?
Yeah. Well, I think right now is kind of a little bit of a tricky situation in the market where the question is like, yes, you do want to have cash at some point so you can play offense when nobody else can play offense. That's the obvious reason, right? But when do you raise the cash is the question. Do you raise it sort of, if you think you're 70% way through a drawdown, do you try to raise it then for the remaining 30% so you can capture it at the lows? Or do you wait to see how things play out? Because I think time and again, what we've seen, I think we kind of saw it a little bit of this week as well, is the market seems to panic very quickly, and the central bankers respond very quickly as well to deal with that panic. Because right now, if you kind of, again, I don't want to make this a macro conversation, but where I think the central bankers are is we kind of probably solved this inflation problem. Now we want to land the plane, and we don't want to have a hard landing. So they're kind of in this mode of like potentially panicking too quickly and easing too early because they want to avoid that. So anyways, my view is it seems like we're range bound for a while. And if you think that, then you probably want to raise cash at the higher end of the range than sort of 70% way through the range.
Pranav, how do you think about though, like at some point you break out of a range, right? So you top down, you're ranging. At some point it hits the top and then it just kind of breaks through, right? So for people who are trying to, you know, it's bouncing between 50 and 60, let's call it. And you're selling at 60 and you're buying more at 50 and you're selling at 60 and you're buying more at 50. And then at some point it breaks past 60. So how do you think about then you're caught on the other side of that?
Yeah. So I sort of in my brain separate the market into two environments. Environment one is own good assets and focus in the medium to long term. Don't try to be tactical. And environment two is try to be tactical. And I think in the first half of this year, our view was let's be tactical. For all of last year, we were like own good assets and just play it out, right? Because we started our strategy mid-June 2022, where the entire world was kind of falling apart in crypto. And all you had to do is own the winners and survivors, and you probably did okay on the other side. Coming into this year, everything had done extremely well, and you could see the obvious kind of frothiness in the market. And that's when we were like, you know what, we should probably be tactical because everyone is, you're seeing just stupid things happening where like you have a new token launching every week and there's a new points program for something and there's just too much supply of alts and all these things happening and you're like, all right, I want to be tactical here because everyone is feeling very trigger happy and everyone's risk appetite is very high. I think around May, things started to change, which was you had obviously candidate Trump coming out supporting this asset class, and then you sort of saw this like light at the end of the tunnel for the entire space, which is, if you can get the regulatory landscape to fix itself, then more people will use crypto products, for simplicity to say stable coins. And at the same time, more people have the ability or air cover to allocate to tokens, allocate to the token market. So if you solve those two things, that's a big enough catalyst where you're like, you know what, I don't want to be too tactical and too cute here. I can just focus on that medium to long term. And that's kind of when we shifted our mindset. So we're not being tactical at this moment. We're just kind of focusing on the medium to long term.
Okay, Yano, something you said around, and then it moves up. All of a sudden, we're under this impression that you have to constantly be in the market and playing every hand the dealer is dealing, because it's going to up from one day to the other. Bitcoin's going to be at Kathy Wood's prognosis, which is, we're going to wake up one day and Bitcoin's going to be at 250,000. No, the reality is you felt it, right, Pranav? Like,
yep.
You're sitting there and like Solana is ripping in your face.
Yep.
And you had, by the way, you didn't get it at 8, you could have gotten 16. You didn't get 16, you could have gotten 50. You could have gotten 60, 70, 100.
Yep.
You felt late at all of those points because most people psychologically feel late. So the argument, I guess, to counter my position of like holding cash is that if you're not you're perhaps more likely to be paralyzed because you hate everyone loves to time and is obsessed with timing the bottom.
Yep.
And again, the most important realization shift for me this cycle is, and maybe the capital base is different, and that's why I kind of operate like this, is I'm not looking to capture more than 50, maybe 60% of the absolute return that this cycle is going to deliver.
Yep.
And that encompasses many things: having a little bit more cash, not going off too much in the risk spectrum, DCing in and out. Like, these are kind of things that, but of course it's difficult, even though like you write it down, you have it like seared in your brain. It's when people are making more money than you, it's like, oh, fuck, I'm not capturing. Maybe Bitcoin actually goes to 400,000 this cycle, as Dan said in 2019. Maybe, who knows? Anything's possible.
I just feel like I'm so far on the left side of the curve from you guys. Cause like my strategy is honestly just, I sit here and Bitcoin goes down and I just don't really do anything. And if I have some extra cash from like my Blockwork salary, I'll buy some more Bitcoin. And if Bitcoin goes up, I'm not trying to sell it. I'm not thinking we're range bound. I'm not trying to sell to then go buy lower. Like, I'm just sitting, not
This
selling.
is like the meme that Shao had, which is buy, set, and forget. Just come back.
Yeah. I just listened to you guys because you guys are such like brilliant minds at this. I'm just like, I don't know. I
think in most times that's probably the best approach, but you do need to avoid the 2022 90% drawdown events as much as possible, right? And you never know. Yeah. It's hard to call those things. So every now and then when things look like there's poor asymmetry from a risk reward standpoint, it always helps to raise cash. Like, we'd felt like that April of this year, which is like March, April this year, where, you could just see the frothiness. Like, funding rates were through the roof. There were days where Bitcoin funding was like 40-something%. Alts were also having a very high funding environment, and open interest had gone up a lot, and people were making money too quickly, and everything felt so amazing. Like, you're like, well, this party's not going to last for a long time, and like there's not real clarity on a lot of the regulatory things, so it just feels like a better moment to have some cash. Versus now, I think there's regulatory clarity. Look, I was looking at this yesterday. The amount of open interest we wiped out in Bitcoin, ETH, as well as alts, we're back to kind of like November of last year levels. So you've taken out all the excess in this market.
Let me ask you guys about this presidential election and like how you trade around it. So I've heard there's a lot of conversation on Twitter this week, which is Polymarket polls showed Kamala, I think, overtaking Trump at one point this week. It looks like I pulled it up now. Trump is at 50%, Harris is at 49%. But I don't know, does that factor into, I guess there's two questions. Like, how do you think about doing that on a very short-term basis? The longer-term question is like, I guess Santi and I have talked about this, Pranav, how much do you think this really makes an impact on like longing crypto versus not longing crypto? Like if it looks like Harris is winning, are you going cash? And if it looks like Trump is winning, like you're lever longing SOL right now? Like how do you think about this?
We're not trading the election that way at all because like these
Yeah.
things are so hard to predict.
Yeah.
And it's also like investors aren't giving us capital to trade election outcomes necessarily. But I will say this, which is kind of interesting. We subscribe to this investor survey where like all these institutional managers like ourselves, like, you know, basically answer a whole bunch of questions and then they send out the survey results every month to us. And so I'm not gonna, this company's in stealth, so I'm not gonna call their name out there, but there was a question that was asked, which is how much do you expect the market to move and how upon the election? And all these managers with an aggregate amount of $3 billion of capital, it's 44 managers, I believe, said that they expect the market to go up between 10 to 30% in crypto if Trump wins, and the market to go down 10 to 30% if Kamala loses, right? So that's kind of market psychology right now. So as Trump's kind of moved up, or sorry, moved down in the polls, markets have drifted down. So I think if you can chart like Trump odds on Polymarket, along with like, let's just say the price of Bitcoin or whatever alt, there's probably a high correlation there in the last 30 days. So I generally think to the extent Kamala Harris pivots on her views on crypto, then you're removing this left tail that people perceive the market as right now. So if you can remove that tail from the market, then you could have a pretty nice environment between now and election. Now, post-election, then the question is like, who can execute on regulatory clarity faster, right? So Trump's kind of promised you first 100 days, crypto council, pass some legislation. So that seems to be a faster path versus the Kamala path right now seems to be, you know, litigation with Coinbase, Binance, get outcomes. Maybe that goes to the Supreme Court one day and we'll get an outcome from there. That's the path. If you can maybe change that path to some legislation, maybe it'll still take more time with Kamala. That's still good, but there's one that's better for the market than the other.
Yeah, I'm not trading it either. I think I tweeted about this yesterday. There's too much focus on predicted or Polymarket odds, which by the way, they've peaked. They've peaked for Trump. They will not go as higher than what the day after the assassination.
100%.
Like,
100%.
no surprise, right?
Yeah.
I still think he wins, but you know, again, I would agree with Pranav. Very difficult to predict. Like, Nate Silver hasn't gotten it right after he got it right. He's a one-trick pony. And so I think the more important question is like, we weren't even like talking about Trump and a presidential candidate being super pro crypto, and the market was rallying substantially. Like in November, no one was talking about this. It wasn't an issue. And I think sometimes in crypto, we tend to anchor too much and place too much weight on certain things. And my thesis is it doesn't really change much if you zoom out and go farther than 12 months on the margin, but not, it doesn't invalidate the entire cycle, I think. You have the Chevron case is probably something that people have completely forgotten about. This idea that administrative overreach is peeled back. And so that's huge. And you're seeing courts rule in crypto favor. You know, most Bitwise, Grayscale, not Bitwise, it was Grayscale, Coinbase, Ripple yesterday. So like, that's very positive. How much emphasis do you place on that? Like Pranav, you said earlier, I think we talk too much about government is what I'm trying to say. And that is it only goes down from here. If Trump odds only go down from after the assassination, the regulatory fierceness, the intensity that we felt in this industry is only going down. That is positive for the space. And just this idea that it's like in the conversation in the US, I think also helps so many other countries, so many other regulators that are observing this and saying, okay, yeah, like clearly it's a thing. It's an asset class, right? You have in Brazil, you have a SOL ETF, right?
Yep.
No.
Well, let me ask you a question. You guys see this a lot. I'll tell you my bias, and I'm curious what you think. I believe that the best builders in crypto are yet to come. Like, I think the ratio of, let's just say, mediocre founders to high quality founders in crypto is like very different than what it is in Web 2. And I think some of those, like I talked to, there are a bunch of investors in my strategy that also invest in sort of TradFi or Web2 stuff like AI funds and all these things, right? And one of the things they tell me is like some of the best AI builders don't want to touch the space because of like all the regulatory headaches. But if things were cleaned up, then they might leverage stablecoins, for example. So I feel like the best builders are yet to come, and I think cleaning up the regulatory means those people will just leverage the tools crypto has to offer.
I would agree with that. I would also push back a little. So, Santi, I agree with your take on. We peaked in terms of how much people think that politics matters for crypto, I would say, but and like Trump's odds and all that kind of stuff. But I do think, I mean, there's some big decisions. What I think peaked is how much the president will impact crypto. But what does matter that I don't really hear anyone talking about is like right now there's a big decision between like Gina Raimondo and what's that other guy's name? Wally Ademo for Treasury Secretary. Like that does matter. And also like the SEC chair. Like it's probably either going to be like Gensler is 100% out in my opinion. Like Gensler, no matter Dem or Republican, like Gensler.
And that's like the most important thing.
Gensler's out, but it's either going to be Caroline Crenshaw or Hester, or like someone like Hester Pierce. Like Hester Pierce, amazing. Actually, Hester Pierce probably.
I don't think it's Ryan Selkis.
Yeah, maybe Selkis gets it. But like Crenshaw, arguably would be even worse than Gensler, even worse. Which I know seems crazy.
But again?
But we're winning in the courts. Is the
you call their bluff? Like, you call their bluff. You're winning in the courts, right and now. So that's the most important thing.
I'm agreeing with you. I think that like.
I hate talking about government. My dad reminded me we talked too much about government.
He was like big government guy.
No, like my grandfather was Secretary of State. Just as an aside, no flex.
In what country?
In Mexico.
Yeah. No flex. No flex.
But like, I just think my dad actually reminded me this the other day. He's like, back in the day, like we wouldn't talk about government the way that we talk about it. Now it's all the time, constantly. It's like good government is invisible.
Yeah.
And like we should just like, I don't know, like it gets tiring, but I hear you. Like on the margin, yes, I don't think it invalidates. We've had all of these cycles that we're talking about, 2019, 2020, 2023, 2017 in a, pretty adversarial regulatory environment. So it only gets better from here, irrespective of who wins in the US. I think.
What why was jump selling, Pranav?
$1 trillion question.
I wish I knew. I've obviously read all the Twitter threads people have been posting. One of them is like one of your Blockworks guys, Jonah, who seems to like have the answer to everything.
The 1000X guy?
What's that?
The 1000X podcast guy?
Yeah. Honestly, I don't know. I have like, we can speculate. One is like maybe they saw the unwinds from Japan coming, like the amount of carry trade unwinds, and they wanted to get ahead of it on Sunday because it was like so ridiculous that someone's selling on a Sunday, right? Like when everyone knows if you're like somewhat marginally sophisticated, you don't try to move size on like a low liquidity day. So they were doing that on chain, and or at least people thought they were moving ETH on chain, and that meant they were going to sell. I don't know. What do you guys think?
I'm asking you guys because you're smarter than me, so that's why I ask the questions. Yeah, I don't know.
It's the unknowns that marginally worry me a bit. I'm like, I don't want to read too much into it. This is when like the atoms come out with like the mega threads of like, this is an FTX type of event.
I messaged Santi Vinny Lingham's tweet. It said, I've got a sneaky suspicion that something, aka a 3 arrows or an FTX, broke over the weekend.
I know, Vinny. Do you want me to invite him to this?
Vinny?
Like I have to chat the whole time. I literally was talking to him this morning.
I messaged him. Well, here's what he said. I think it's fun to share. I said, what's good with this? He said, yeah, it's really not about jump. It's someone that forced jump to do what they did. I said, big hedge fund got on the wrong side of a trade, ? He said, yeah, ETF linked possibly. So like something like that. So that's what I'm like, is there something here? Or is this like just fun for a good tweet,
But also, I mean, we generally know who the big market makers are in the space. I haven't come across jump in a long time myself, like, from a market maker perspective. I didn't realize they were like, you know what I mean? Like I thought they were kind of out of business.
By the way,
Jump crypto.
There is. Okay, are there systemic actors right now in crypto other than Coinbase
Binance.
and Binance? It's not them, I think.
Yeah.
Like I don't know how it would be them unless like, but no, like, so like, okay, maybe a hedge fund blew up. Okay. But I don't know. It's nonetheless, it's the point still stands. It's quite odd that they decided to do this in August on a Sunday. Like, pick the worst moment in time to
Yeah.
so
I mean, look, they have a big market making business on the TradFi side, and a lot of people in TradFi were worried about what happened on Monday on Friday, right? Because of the move that you had seen in the yen and all the unwinds you'd start to see. So they might have had the right call because their TradFi business sees something that, you know, crypto people like us aren't seeing yet.
yeah. That's probably the more I have heard other threads like outside of crypto. It's like cautioning around the rebound and saying, hey, there might be another leg down. Like, yeah, people have unwound some of the positions, but we don't really know. Maybe there's just some carcasses there that are going to surface at some point.
I think, what was it? JP Morgan put out something saying they thought that 75% of the unwind was done.
Yes,
today.
yes. Yeah.
I mean, like, the question for me is like, okay, everyone knows about this yen carry trade at this point, but if you remember even in crypto when that SDETH peg broke a couple of years ago, the question was like, what are the next pegs to break? Actually, it was Luna that broke, and then that had people go after that SDETH peg. So it's like the question is like, yeah, that's right. So the question is like, what are the other carry trades in this market that are very big that are at risk? And the one people always talk about is the cash futures basis trade on
like Athena?
U.S. Treasuries.
Oh, yeah.
Oh, you're talking about crypto. Yeah, I'm talking about just TradFi markets. People have all kinds.
Markets, yeah.
Yeah.
There's I have no insight here. It was Salini who tweeted about the low liquidity in the treasuries market, especially in the I don't know if you have paid attention to that or what you read into that. Like, he's just like, basically, I was a bond trader.
Yeah.
And I felt like way back, like, I think it was, he referenced 2021, like pre-COVID, like it was like low liquidity. Now he said, I can't imagine, like it's much, much worse. I don't know what to read into that. He basically was, I think it was something along the lines of, no one is really bidding like longer paper. And so that's a signal in and of itself around like a hard landing.
So I know that people are concerned about these off-the-run treasuries, basically like not the latest issue ones, right? Which is why the treasury is doing a buyback of all these things. Here, I'll put it in our chat, because liquidity on these off-the-run treasuries are pretty thin. I don't know if that's what you saw.
And for listeners, like, what's the distinction?
So on the run is kind of like the latest issue one that everyone trades. Like, so like here, and off the run is like something that was issued 2 years ago. Like, for example, the 30-year that was issued this year is the 2054 maturity, right? Like the 2049 maturity is like this 25-year.
Right.
So this is like, people say this is kind of like backdoor QE, which is if like the treasury is buying bonds.
Oh, this treasury buyback program is like backdoor QE.
Yeah.
Yeah.
Any other things? It is concern. Yeah. Sorry.
Yeah. By the way, I think this is an argument for pro stablecoin policy in the US. Is if like liquidity, my wife's like uncle is a like deep in the treasury market at I think it was CME or CFTC or something like, or I think CME, and the only crypto argument that's ever made sense to him is stable coins being the buyer of last resort for these treasuries, saying the liquidity is drying up. And like,
the only thing there, the only thing there is like stable coins can't buy 2040, 2050 treasury. They had to buy T-bills, right? Like short duration. Yeah. Because you can't have a Silicon Valley bank happen to a stable coin.
Yeah. Yeah. Well, unless you're Tether, right? And you're using excess.
Oh yeah, you can do whatever you want with the excess. Yeah. You can go buy Bitcoin with your.
Yeah. But listen, on your point around what could break and some of the carry trades, DeFi, for all intent, I mean, for what it's worth, yet again performed exceptionally well on Monday, and I know a lot of people paying attention to Athena in particular as, a project that might be a little more fragile, and it absorbed like, I think it was 190 million of redemptions or something like that to some. And so anyways, pretty time and time again, at the time it was classic, like left right kind of meme picture. Traditional finance, like there's people lost access to, I think it was like 8 brokerage accounts, like Interactive Brokers, Fidelity, Schwab. It was like, it's like, exactly, this is why DeFi, right?
Yeah.
So
What do you think the
anyways,
leverage is in this market? Like the hidden leverage, because we can all see the on-chain stuff. Like, I don't think we have like another.
but who's lending?
No one's
like,
lending. The lenders
I've
haven't
had an
come back.
idea,
Right.
like you don't have a Genesis anymore. Like I want to build a Genesis, and actually, if someone, like, it was a great business, but you don't. I don't know. Maybe Pranav, like,
Yeah.
Where would that come from?
I don't think. That's what I'm saying. I don't think there is. Back to Santi, this is a conversation we're having on over the weekend, right? We're saying let's put probabilities on, let's just say, crypto going 30% lower, crypto going in this range, and then crypto going to 50% higher. Those 3 things. When I think about those probabilities on the low end, I keep asking, like, what is the thing that drives it to that 25% lower outcome? And the best I can come up with is like
Macro.
a correlation 1, everything just goes down.
Oh, macro, yeah, kind of thing.
Yeah.
Right.
Yeah, that's what I mean, macro.
Yeah. No, that's. Yeah, I agree. I think the conclusion here is that we came over the weekend is, if you look farther out than 6 months, 9 months, 12 months, I've yet to found compelling arguments to be bearish.
Yeah.
For a variety of reasons. Now, the perhaps more nuanced, before you jumped on, Pranav, we were looking at, Yano, if you want to pull it up, the Ceteris tweet that you probably looked at. It was kind of going around circles of the vast just like return dispersion in crypto as it has been in traditional markets. Like basically, if you didn't hold Sol, BTC, or memes, you kind of are flat or down for the year.
Yep.
How do you think that looks like a year from now? So yeah, let's pull it up. So I think you saw it, but here we go.
Yep.
Yeah. So you saw this, right? Basically, it's, if you're not in WIF and Sol and BTC, like, good luck. You know what I mean? Or like, I don't know if you want to read. I mean, we discussed this kind of at length at the beginning of the pod.
Yeah.
But the more interesting question perhaps is, if we're all saying the same thing. Okay, in 12 months from now, how does this chart look? How does this table look?
So I don't exactly know how this table looks, but I'll tell you how we think about this. And we've talked about this, Santi, so it might be repetitive to you. But 2 years ago when 2 years ago when I talked to people outside of our universe and I said, "Do you have crypto exposure?" They say, "We own some Bitcoin, we own some ETH." And now you ask the same question. People often say, "We own some Bitcoin, some ETH, some Sol, and some Coinbase." Like that's kind of like your Mag 7 equivalent in crypto, right? So all I'm trying to do is pick number 5, 6, and 7 on that list. That will be the 5, 6, and 7 2 years from now. And I think in order for things to become 5, 6, and 7 on that list, it has to be things that hundreds of millions of people will be using, and they're very aware that they're using those things, right? Like the reason you have Sol and Coinbase on the list is like 100 million people kind of realize they're using this product, and there's all these other things to it. So for us, we're always kind of trying to pick that asset number 5, 6, and 7, and that has to be, again, something hundreds of millions of people are going to be touching. So when you look at like CoinMarketCap top 100, like you can have like a very elaborate thesis on some token, but then I ultimately go back to asking, will hundreds of millions of people be touching this product that this company or project or token is building, as a result become a top mindshare grab for people in 2 years? And that's going to drive all the returns.
Couldn't have said it better. That's why I'm so bullish on Deepin. Like I just announced an investment this week in Drina. I don't know if you guys participated in that.
We know the team really well. They're great.
I did that one.
Basically like he's been building like this like broadband internet, and like basically came to the conclusion that crypto is the next stage for them to like really scale it out. And it's those type of things. I agree with you. That also just, I agree, like L1s should like be invisible to some extent, but it's like hard to overlook the fact that most of the activity is happening in Solana. Most of the teams are like, even just today, Athena adds support USDE is now available on Solana. One of the founders, Pac Moon, that is prominent in the Blast ecosystem, should not say prominent, but just in the Blast ecosystem, decided to go and leave to build on Solana.
And Ave, did you see Ave?
Ave.
Did you see Mark Zeller? Look at this. I don't think anything's been confirmed yet, but someone tweeted at here, I'll share this tab. So Zoomer Oracle said Ave of Solana sitting at 30 million market cap, heading towards 10 billion TVL. Launched in peak Nuke City 2 months ago, second biggest TVL of Solana after Jito. Mark Zeller, who's obviously big in the Ave game, said would be a shame if. And then I saw this tweet from Chris Berniski, said Camino to Camino Finance, basically the road to Camino Finance. And Mark Zeller said, let's see how long they survive when we launch there. So
I think that Mark is just being Mark. Look, I'm an investor.
Mark is being Mark, but he's also saying, I think that you don't tweet that unless Ave launch. Why wouldn't Ave launch in Solana?
It makes all the sense in the world, right? Do you remember when Lido left Solana? Things I don't understand.
Opened it for Jito. That was the
exactly. Yeah. So look, I would not be surprised if they launch in Solana. Here's the thing: it will actually be really interesting to see how they perform and how much TVL they're able to gather relative to Camino and MarginFi, right? As a proof point for teams outside of the Solana ecosystem, because probably in their mind is oh, maybe these guys are very native, like the Camino, the MarginFi teams are very Solana native, but I've heard it from someone like Kane, that the Solana community has been very welcoming. And I think it's sometimes a concern, right? It's I'm going to Ethereum maxi now, exploring, going into Solana, but Solana community is very welcoming.
So since we're talking about Solana and these dApps, I have a question for you. Have you guys followed what Sanctum is doing? With all these different LSTs?
No.
So it's essentially enabling the long tail of LSTs, and then they essentially have a curve-like product where you can swap between these LSTs with minimal slippage, right? So it's Jupe Sol and there's Bonk Sol and all these things. And on the surface, you're why do you need all these long tail of LSTs? It's kind of the first reaction you'll have to this. But then I've been thinking about this one a lot, which is if you look at just the regular world, you have obviously 5,000 public companies, I think, and you have hundreds of thousands of small businesses. The small businesses don't have their own stock that trades because the market doesn't have such an appetite for so many assets to then include in indices and own them and trade them. The market will never price you the right way if you're just a small business that's trying to have a listed stock, right? Similarly, I'm sort of thinking about this idea that do all dApps need a token? If you're a small dApp, aren't you better off just having your own LST and then monetizing your product a certain way and giving it back to the LST and then actually just capturing value a different way? And that's good for because here's the thing: if a new dApp launches on Solana, right, and I look at that as an investment opportunity myself, then I'm probably going to have to sell some SOL to invest in that dApp. So you're giving me this trade-off that I maybe don't want to make, which is own SOL or own this other random governance token that I think might outperform SOL. And most people are just you know what, we just would rather own one asset. So in this way, you're letting the dApp creator, founder, team capture economic value, but at the same time, you're not having the investor make the choice between selling their SOL for governance token.
Absolutely. I think some Drip, for instance, is moving in this direction, right? Right. They have their own, LST. Helios as well.
Yeah.
They're now the number one validator. I think
they're using Sanctum as well. Yeah.
Excellent observation, right? Because I think if you're capturing attention in some way, shape, or form, capture capital to and natively allow that capital, remove the opportunity cost is what you're saying. Of having to swap something you like, but also on the idle component. This is the realization that the Blur team had. That's the way they built Blast, right? Which is if you're providing liquidity for these NFT marketplaces, you're also missing out on Lido type of yield. So build the L2 with native yield integrated, so that you capture, you retain. It's all a retention and game, right?
Yeah.
And that is relative to traditional tech or fintech. Money moves here much faster. The barriers to exit are super low, and so it's difficult.
Yeah. I think there are certain perp platforms on Solana that might do really well, but I want to maybe get exposure to that by owning the thing that gives me the trading fees in addition to the LST staking yield, but I don't want to own that governance token, right? So I think most dApps should think about having their.
So you could launch your LST and then have some of the fees. Just bundle all of the fees of the platform into that.
Correct.
That's smart. I mean, Jito's kind of doing. Well, Jito has a governance. It is a token that's capturing like a lot of things, right? Do you think that it's feasible for someone like Jito to like, if you were to like do it again, to like not have the GTO token and just like?
Yeah, I don't know. I don't know about Jito. I don't think the current market structure of like every little project that builds one little product that has 10,000 users having its own governance token is like the right market structure.
Yeah.
Because most of those things will just go down 90% over a period of time.
By the way, it's a good thing because a lot of times having a token is distracting for users, like then demoralizing.
Right.
It's like pumped up fun. The projects that actually get off the bonding curve are the ones that actually get attention, but you give them that breathing room as you get a startup before IPOing. Whereas the current construct in crypto is you IPO day one. It's like, no guys, like you have to kind of wait a little bit. So you're saying smaller ones monetize this way, fund the business this way, fund the, the development this way. Once you get their critical size, maybe it makes sense to launch a token in there.
Yeah.
That's a good in-between hybrid thing.
And that goes back to that earlier question you had, which is like that chart of token performance and all these things. I think a lot of managers in the space, including, we think about this similarly sometimes as well. It's like you're always trying to find the next hot thing. And the answer just might be own the thing that is really working and don't try to like, chase for the next hot thing, because the next hot thing actually might not make it.
Do you think that strategy only becomes more important as we have more consumer applications? Whereas historically in crypto, it's like selling the dream. And so maybe it paid to chase that new hot thing, that new high performance, high TPS thing. But that strategy is not going to work anymore because increasingly so you're going to have a very clear understanding of the have and have nots from a technical, from an adoption, from a retention standpoint, right?
Yeah.
Like it depends on the layers of the stack and also in the cycle, but going forward, it is going to be incredibly difficult to justify, for instance, Ethereum being 6-7x the value of Solana when Ethereum fees are down 57% in the quarter.
Yep.
Because of, was it 4.8? What is it?
4.844. Yeah.
And it's and all of a sudden Solana fees plus MEV and then applications getting a lot of traction.
Yeah.
Like you couldn't stand on you couldn't put a finger on some of these benchmarks and some of these analyses of like ideologies in prior cycles.
Mm-hmm.
This cycle and subsequent cycles, I think it's going to be just increasingly clear from a, kind of undisputed manner.
Yeah.
The have and have nots.
Yeah.
That goes for bottom parts of the infra, middleware, but primarily like ecosystems and then like the applications within those ecosystems.
Gents, I hate to do this. I'm 5 minutes late for a call. I think I'm the admin on this.
All right, Pranav, thanks for joining us on short notice. I was talking about you before you joined. Let's have you on again next time.
Yeah.
Of course, anytime.
Yeah.
Happy it is.
That's good. All right, good luck, guys. Thanks for joining and good luck. Thanks for now.
Cheers,
Take
everyone.
care. Bye.
Thanks for watching today's episode. Just wanted to quickly mention that the wait for crypto's killer app wave is nearly over, thanks to today's sponsor, Anoma, the universal intent machine. To stay up to date with Anoma, you can follow them at x.com/Anoma or sign up for the newsletter at anoma.net. Thanks again to Anoma for sponsoring today's episode.